Markets do not go up forever. So we have to ask, is it time yet? And if it is, for what? Here's a daily chart of the SPY, the S&P 500 ETF. And we can see from the 50 SMA and the 150 SMA, which are probably the most conventional trend indicators there are telling us that the bullish trend remains intact. So if we want to short this market, and I do, then we're going to have to make it counter trend, which means maybe half positioning and keeping a tight close or a tight look on stops. One of the motivations for shorting the market was the 78 periodicity, which is fairly short term and good enough to use, I believe, for short swing trades if you're going to be trading intraday data. And the projections came out a tad high on price, but I think they're spot on time-wise. And with the blue trend setter, just pointing still straight up, we can see that the red and the green, the short and intermediate term averages, are over the blue. And we know that at some point in time, because the intersection has been made, that they're going to have to roll down over them. So timing-wise, I think we're spot on. So what I did was I used the built-in updater, downloaded some Yahoo near real-time intraday data, and made 65 and 30-minute charts. The 30 or the 130-minute chart has not yet gone through a breakout price, although it's now clear of the breakout bands. So on the 130-minute chart, we don't really yet have a short entry signal. But a couple of the motivations with the 130-minute chart is that the vortex trend indicator is indicating that the trend, the underlying trend and the 130-minute level has reversed to bearish. And the way you use the vortex trend indicator is that the red lines indicate bearish trends, the green bullish trends. And if the red line is above zero and heading up, then at this moment in time at least, the trend has shifted from bull to bear. And the other thing that we had was a triple divergence on the MACD oscillator. And we did get a momentum change a day and a half ago. So we do have a sell signal set up, although it has not yet been hit on the 130-minute chart. But the real play intraday, for me at least, is the 65-minute chart, which is about the shortest time frame that you want to trade unless you're going to be looking at the market all day real time. And on the 65-minute chart, we had a divergence also, and we had a momentum shift day and a half ago, same as on the 130. But because it's a shorter time frame, it moved our breakout price higher, and that was 180.60, which was hit today. So right now it's a good trade. It's a counter trend trade with half a position because the major underlying trend is still up, and it's going to take some work to change that. So right now it looks good. We're going to hang in there and keep our stops tight, and we're going to see how this plays out.